I think a lot of times when people decide that they want to get into banking, the question arises is, well, what does that mean? What kind of bank do I need? In the past, national banks were kind of what everybody thought they needed to be because you're a national bank. People thought you could do anything across the country if you were a national bank. That's really not the case. There's really very little difference between national banks and state banks. In fact, what we've seen in recent years is the number of national banks in the country have declined fairly dramatically, especially in the smaller size range. And so we see a proliferation of state banks. And so most people getting in banking will generally find a state bank before they'll find a national bank. And as far as chartering, there's really not a lot of difference because the same agencies have to approve them. You have to get approved by the OCC for a national bank and the FDIC. For a state bank, you have to get approved by the state regulator and the FDIC. So what we see nowadays is most people are looking for state banks. You can always convert if you decide you need to be a national bank. And really the only reason you'd want to do that is if you have an interstate consumer operation making mortgages across the country with a mortgage banking operation. National banks have a preemption that allows them to be more efficient at that, where state banks don't have to file state by state. But otherwise, state banks tend to be the preference. Now, there are also other types of banks. For example, an industrial loan company. There's 9 states that offer ILCs. Industrial loan companies are more monoline type banks, credit card banks, car banks. Toyota, BMW have ILCs. So they're more of a unique type of brand or a banking plan. Square recently filed for an ILC. The reason they filed for an ILC is because they don't want to become a bank holding company. There's an exemption for ILCs that the owner of an ILC, if it's a company, does not have to be a bank holding company. So that's been the draw. That's why Walmart tried to acquire an ILC. Retail companies can own banks, but they could at the time, back in the 90s, early 90s, own ILCs. So that's why you see some people choose ILCs because the acquirer doesn't want to be a holding company. Investors that are drawn to ILCs generally have are companies that don't qualify to be a bank holding company. So the ILC is a route they can choose and still have a financial institution and still be a monoline institution, that one particular line of business.